So today I wanted to share a story about how it took me 8 months to close this construction loan client. When we first connected to when we just closed last week. Today's February 25th, 2025. And before I give that client story, we always give a rate update in our newsletter. And so rates, really, it's only Tuesday. So Monday, Tuesday, rates have been slowly improving. But last week, rates were slightly improving as well. So we've kind of had a downward trend the past 4 or 5 days for rates to improve. And that trend that I'm referring to is the ticker TNX, which is the 10-year Treasury note. It's a great way to follow rates. I highly recommend that you can just Google Yahoo Finance TNX and you can see this ticker that's the 10-year Treasury note. It's slowly been sliding down, and I think it'll be interesting to see what happens on Friday. Friday's kind of a up in the air day, and if rates are still trending down by Friday, I think it's a really good sign that it's enough for the consumer, the person borrowing money, to really notice that rates are improving. So it'll be interesting to see what happens on Friday. But back to the story about how I connected with this client, because that part's kind of interesting because I follow the lot transfer. So when someone buys a lot, I follow the transfer list, and based upon the address of that transfer list, you can kind of guess or take a good guess of what lots are going to be built on quickly. So I did an aerial view of the lot on Google Maps and saw the size of the lot, and I said, I think that person's probably going to want to build. And so I reached out, just looked up phone numbers online really, and connected. For confidentiality reasons, I won't use her real name, but as a fake name, let's just say her name's Jennifer. So I connected with Jennifer, and she basically wanted to build as soon as possible, but she didn't have a contract yet, and she didn't know all the ins and outs of construction loans. So we kind of just talked about the general nuances of how construction loans are a little bit different than buying a home, what things are needed or be prepared for in the future if she's going down this path of wanting to build a house. And so it was a very brief conversation, really. It was 10 or 20 minutes, but she gave me her email, and I followed up really with a pretty lengthy email, probably about 2 pages. I really tried to make it visually appealing and very simple, easy to grasp what the next action steps are. And what was really interesting is I wrote that email, in the summer of 2024. And during this process, as she got her construction contract, she would actually refer back to that email because she felt like it just explained the process really well, which made me feel good because I put a lot of time and effort into this one email, hoping that it would make a lasting impression where she'd want to work with me. So part of her challenges, I think that's important to mention, which is common for people that want to build a second home, is that one, they already have a mortgage payment on their primary home. They already have typically some other miscellaneous payments like a car payment, etc. And then they're going to have another mortgage payment being the new house they're going to have on the Outer Banks. And construction loan lenders typically don't allow or don't consider that income from the property that she's going to be getting. So she has to qualify, or most borrowers qualify, without the rental income of the second home property. And so that's kind of a unique part of it, because as rates increase and payments get bigger and bigger, it makes it harder, obviously, to qualify for these second home construction loans. Additionally, when I talked to her about when she purchased a lot, she had received financing on the lot. She put 25% down, and her whole goal was to conserve cash. And that's another common thing that our borrowers want to do, because they know that once you build a home, that you have to furnish it and other things. And their goal is to conserve their cash, not use it all on the property initially. So that was a part of one of her really big needs for when she was going to go to build in January or go to apply for a construction loan, is that she didn't want to use all of her cash. So to give some examples, these aren't the exact numbers, but just to make it easy to grasp onto and obtainable, let's say someone bought a lot for $200,000, and let's say the cost to build was $800,000. You want to think about it like a purchase at this point. Like, what's the hard cost of this project? And the hard cost obviously is $1 million. And so most people buying $1 million property put 20% down. which means you're getting a loan amount or borrow $800,000. So she wanted to borrow the most amount of money possible, and she had to pay off a lot, and she had to pay for the construction contract as well. So that being said, she felt like the lot that she purchased was really worth more than $200,000 in this example. Again, it's not the exact numbers, but she felt like it was worth more money. And I really wasn't convinced. She had just bought the lot in the summer. I was talking to her, a few months later in the fall. I wasn't convinced that this lot was really worth more. And I didn't have a construction contract at the time, but we looked at comps, and I was pretty pessimistic about if the lot truly was going to be worth more than what she bought it for just a few months ago. Additionally, something else that is a big challenge for lenders is that they typically don't use a new value unless it's been a full year. And of course, she's looking to use a new value just a few months later. And so those are typically, or that type of approval to use that higher value is an exception. So not only did I see a challenge to even get the value that she wanted so she could have a lower cash to close, but also I had the challenge of underwriting approving the higher value. And so when we started the process in January, I was pretty pessimistic if we would actually get the value she wanted so she could have the cash to close number she wanted. And so I was really surprised that she did get within $10,000 of the cash to close number. And so therefore she could, obviously if she got a higher value, such as in my example of $1 million, she gets a value of 1.1 as an example, then she can borrow, as again, think of it like a purchase, put 20% down, she can borrow $880,000 if you did 1.1 times 0.8. That's what she can borrow. Point being is that the property did appraise for that higher number, and she was able to bring less money to closing. Now, once we overcame the challenge of the appraisal, given the value that she wanted it to hit, also convincing underwriting to use the value that is higher even though she's only owned the lot for a few months. Once we overcame those issues, we also had an issue with her debt to income because she had just started a business. She actually was selling eggs, believe it or not. It's kind of funny. We're in this inflationary period of where eggs cost about $9 for about 12 eggs, which is crazy. But she started this little farm business, really as a side hobby, but it did report a loss. And so I have to give Drew credit here. He basically said, well, she does have this loss, but these are really one-time expenses for her to start her business, and they're not going to continue. And so we shouldn't really have to count these losses in her business, and so therefore the total loss should be a lot less. So I took that to underwriting, and with some documentation from her CPA about how they were one-time expenses, and providing a profit and loss for that year, and some other reasons why they would consider a lower number for a loss. And I was really surprised that underwriting accepted that we could reduce the loss by a significant amount, and it allowed her to qualify. So it really just kind of came together full circle about not only was there so many other challenges in the file, but just knowing how to understand a tax return from a self-employment business scenario was also really critical. And in today's underwriting world, it's really rare that you can get two exceptions in one file. And we had an exception on value, and we had an exception with how we calculated the business income. So it was just a great outcome. And if you're ever thinking about building a house, we'd love to help you. If you have a question about a construction loan, my email is at the bottom, or you can just comment. And it'd be great if you would like the video and subscribe for more content. And we hope you reach out to us again if you have financing questions, and we'll talk to you next week.